All right. Good afternoon, everyone, and welcome to today's webinar on integrating digital advice with your advisors. We'll be getting started in just a few minutes while we wait for a few more folks to join. Thanks. All right, as folks are filing in, I'll go over a couple of ways that you all in the audience can join today's conversation. The best way to join is by clicking the raise your hand button at the bottom of your screen. I'll get a notification and that'll allow me to invite you to join today's panel. You can join us by video if you're set up to do that, or just by audio if you prefer. That way you'll have a chance to ask your question, have any back and forth and follow up that you want to have. If you prefer, you can also send questions to us and comments as well using the chat function. We'll all be keeping an eye on that throughout today's event to make sure that your questions get answered. All right, and I see that that folks are filing in at a good clip here, so we will go ahead and get started. Good afternoon and welcome to today's webinar on integrating digital advice with your advisors. My name is Tim Kehrer. I'm with Kehrer Beelan Research and Consulting. We're pleased to be the hosts of today's event. We, of course, couldn't be doing this today without the support of our sponsors, so I'd like to thank them now. Our sponsors today are Ameriprise Financial Institutions Group, eMoney Advisor, and AssetMap. Thanks to all of you for making today possible. The other piece of the puzzle that makes these events possible are all of you that have chosen to join us today out there in the audience. So I want to thank you for doing that. I want to encourage you to join today's conversation. You know, we don't host events like this because we like to hear ourselves talk. We host them because we think there's genuine value in the interaction and the sharing that happens among those of you that choose to tune in. To help get the conversation started today, there are going to be a few folks on your screen. I'm going to actually stop sharing my screen now and then do introductions so that you can see everyone's face as I do this. Thank you for joining us today. Kelly Brennan from eMoney Advisor, Holly Grelier from Addison Avenue First Tech Credit Union, H. Adam Holt from AssetMap, Jessica Neuweiler from Webster Bank, Webster Investments, Devin Scott, First Interstate Wealth Management, First Interstate Bank, and Kelly Zanstra from the Ameriprise Advisor Center. As I mentioned, these are the folks that are going to be on your screen throughout today's event. But for those of you out there in the audience, you have a way to join us too. Click the raise your hand button at the bottom of your screen, and I can bring you into today's panel. Or if you prefer, you can send us your questions and comments using the chat function. With that, I'm going to turn it over to Ken to go over the structure of today's call.
Yes, Tim and Peter, I thought that today we would use the customer journey as a framework for our discussion. And I guess at the beginning of the journey, it's really helpful to understand how customers, consumers, people would like to access financial advice. And Tim, why don't you show us our latest research on consumer preferences for financial services delivery?
Sure thing. Yeah. So the data that I'm going to share with you right now comes from the Macromonitor survey, which if you've followed our work, you know how much we love working with this database. It's a nationally representative sample of around 4,000 US households. It's conducted every 2 years. It's been conducted every 2 years going back to the 1970s. It's an incredibly detailed survey, and we use the data in any number of ways. Today, we're looking at 2 questions in that survey that we consider to be sort of barometers of channel preference, right? So the first question on the left-hand side of your screen, I prefer to do most of my financial business in person. And on the flip side, I feel comfortable doing financial business online. We've been tracking the results of this aspect of the survey for a while. I've got 2 years up here for us to look at today. Starting off with on the far left-hand side of your screen, that dark blue bar, that tells us that 65% of all US households agree with the statement, I prefer to do my financial business in person. So a solid majority. Among households that, and I should say that was back in 2016, right? So in 2016, 65% of US households agreed with this statement. You can look over at 2018, you can see that in 2018, 64% of US households agreed with that statement. So maybe somewhat of a trend there, right? That the preference to do business in person might be fading. Worth noting, for our audience today, among households that own a brokerage product purchased from their bank, that's the light blue bars, those households are more likely to have a preference to do financial business in person. Although again, the trend is similar, right? 71% in 2016 versus 69% in 2018. Now, the third population that we're going to look at through this lens are households that use a robo-advisor and also have at least $10,000 in assets in invest. So in other words, we've taken away the robo users that have minimal assets. And there is, a difference for sure between the average US household and again, the bank brokerage customer household and these robo users. Only 58% of them agreed with the statement, right? I prefer to do my financial business in person in 2016. That went down to 55.7% a couple of years later. Probably not surprising, right? These are households that choose to use a robo-advisor. They might not have as strong a preference to do business in person, but it's worth noting a majority of them still say they want to do their business in person. Flipping over to sort of the inverse of this question, right? I feel comfortable doing my financial business online. You can see there isn't much difference between the average US household and the bank brokerage customer household. Again, the dark blue and the light blue bars. But the trend over time is pretty clear here that from 2016 to 2018, both of those groups became more comfortable doing business online. The bank brokerage customer household even more so, right? You can see that there was a kind of a slight lift in the dark blue bar and a more pronounced lift in the light blue bar. And again, probably not coming as a great surprise here, households that use a robo-advisor feel even more comfortable doing business online, but similar trend over time there as well. Now, of course, we can speculate about what 2020 will look like. We will be able to look at those results in January. This most recent iteration of the survey was conducted this past summer, so during the height of the crisis. And we can speculate about what these numbers for 2020 are going to look like, right? That chances are, as many customers, many clients have been forced to do more of their financial business online, their comfort with doing it may have increased. So we will get a look at that in January. Another thing that we can track through the macro monitor is the use of online investing. Now, the definition that's provided in the survey, which I've given you at the top of the screen here, is pretty broad, right? So it certainly covers the sort of direct to consumer online investing solutions that are out there, but it's a little broader too, right? In that it also covers accessing financial advice online. You can see, starting on the left-hand side of the screen, these are households that use online investing. Two interesting things to note here, right? One is that bank brokerage customer households are much more likely to use online investing today than the average US household, suggesting that maybe those things aren't mutually exclusive, right? That the same client of an advisor might also be interested in doing some online investing that they control themselves. The other, of course, is looking at the trend here. Among those light blue bars that the bank brokerage customer household, it actually looks like the use of online investing sort of slumped a little bit from 2016 to 2018, while it increased among US households in general. So again, the trend there, might not be so clear, but the real takeaway, looking at this slide as a whole, is that 2/3 of your clients today, of your advisor's clients, are users or likely future users of online investing. 2/3. So if your institution doesn't offer an online investing option, you've got to ask yourself, where are your clients going to go to do that business? One thing I'm going to note here, you might have noticed, right? I've dropped the robo population from these slides because they're close to 100%. So they would have sort of thrown off the scale of these charts. But I am here going to drill a little bit down into those robo user households. And we're essentially comparing here the trend in the use of your traditional financial advisors, what the macro monitor calls the financial professional. So whether this is a bank or credit union-based advisor, a wirehouse advisor, a financial planner, these are sort of the traditional figures that fill that advisor role for a household. You can see that probably not surprisingly, right, those light blue bars, the bank brokerage customer household, are much more likely to use a financial advisor than the average population. Maybe even more striking, though, are those green bars, right? So the robo user households are much more likely to use a traditional financial professional, north of 60% of that group. Again, suggesting that the use of a robo and the use of an in-person advisor may not be mutually exclusive. Worth noting as well, the little bit of a trend that we see here, right? That 2016 to 2018, fewer of the bank brokerage customer households and fewer of the robo-advisor households reported using a traditional advisor. Now that being said, it actually went up slightly among all US households. Looking on the right-hand side of your screen, these are households that use a robo today or used a robo when they answered this question. The trend here, I think, is pretty striking. Only 4% of US households in 2016 reported using a robo-advisor. That went up to 6.2% in 2018. Still a small portion of the population, for sure. But if we see similar growth, right, from 2018 to 2020, kind of in the range of 50% growth, then close to 10% of the US population is using a robo-advisor today. That's pretty noteworthy, I think. Also, again, note that your clients, the clients of your advisors, are more likely than the average population to be using a robo. So once again, these two channels may not be mutually exclusive for a lot of clients. But again, kind of maybe the most important takeaway from this screen is the concept that the use of robo-advisors is absolutely on the rise. I have no doubt that when we see the 2020 numbers, we will see further growth. In the meantime, there's evidence to suggest that the use of traditional advisors is actually in decline.
Thanks, Tim. Well, let's get back to the customer journey. The marketing people who seem to want to define these things for us tell us that the customer journey begins at what they call the funnel, the point at which a customer, a person becomes aware that you're offering, in our case, financial advice. In the bank and credit union environment, that funnel has been referrals from the branch staff. That's been the primary funnel by which people get to understand that we're offering financial advice. And we've documented this continuing decline in referrals from financial institutions staff to advisors over time. And we suspect that it got worse during the pandemic with branches being closed and so on. So that calls for new ways of engaging with clients. Peter, you remember when we did the survey for BISA in April, we gave the CEOs of the investment services firms and banks a laundry list of things that we asked, are you doing more of these things now? And which of those things do you intend to do more in the future? So it's a pretty exhaustive list. But one thing that stood out relative to this conversation is that hardly anybody chose digital marketing as something they were going to emphasize currently or in the future. And it would seem that that's like a bird's nest on the ground that firms are missing out on. So looking around, we said, well, who is doing a lot of digital marketing? And we found Jess. Jess, why don't you tell us what you're doing?
Sure, thank you. Thanks for the opportunity. So at Webster Investments, we have about 55 financial consultants and wealth consultants. And we've always supported them from a marketing standpoint, but when we looked at the pandemic and the environment that we were now in, we quickly realized that we needed to shift our primary focus to digital marketing. And so what we've done over the last 9 months or so is really centralize our marketing to support them in a few key areas. One of those is helping them with email campaigns. So we are, Webster Investments is, LPL is our broker dealer. So we are on the LPL platform. So we are able to leverage a lot of the content that they curate for us. And we very quickly during the pandemic were at a pace where we were making sure that we were in the beginning communicating at least once a week, sometimes more, depending on the market volatility, and made sure that throughout the months ahead, we were at least communicating once a month via email. And that was to clients, prospects, and also centers of influence and business partners. In addition to email, just the kind of ongoing campaigns that we do, we make sure that we have different touch points with our clients and prospects throughout the year. So we build out, a content calendar with our advisors, and we're making sure that we're acting on that client service model throughout the year, but truly dialed that up from a marketing perspective and a digital perspective during the pandemic. In addition to email, we've also put a strong focus on social media. And what we've done is our advisors have the ability to be on Facebook, LinkedIn, and Twitter, all 3 platforms. And so what we do for them is, again, we handle from a centralized standpoint in our back office, doing social media for our advisors. And we're doing posts for them at a minimum 2 to 3 per week, sometimes more, depending on the content, depending on what's going on in the markets, but at a minimum 2 to 3 times a week on those platforms for our advisors. And then thirdly, really making sure that how do we get information out to folks, in this digital space that we're in. And we've really done, to our advisors' credit, a great amount of webinars this year. And we've helped them promote those both through email, through our partnerships with our banking center management team and getting the word out to our banking center, customers, and then also leveraging social media to promote those webinars. And we've done webinars that are both specifics for specific advisors to their client and prospect base. We just held a long-term care seminar actually yesterday for one of our advisors, and he had 58 clients on that webinar yesterday. And we've also held wide, Webster investment-based webinars where we've had industry speakers, research analysts from LPL, and we've seen upwards of 200 to 250 folks on those webinars. So really just trying to make sure that from a centralized standpoint, supporting our advisors so that their voice is coming through in all three of those, channels, social, email, and then also through webinars during the pandemic.
Thanks, Jess. Anyone else have some digital marketing experience to share?
Maybe one question, Jess, on that. How do you engage the advisors as far as what they are able to participate in? I mean, you said you help them with the posts, but for like the email, for example, do they give you a list and then it just goes automatically and it shows from them? Do you give them the content? Do they send it? How does it mechanically all work for advisors?
Sure, great question. So we leverage a tool that's brought to us through LPL called Automated Campaign Tool. And what we do there, Peter, is we work with each advisor individually on their list so that it includes not only clients, but prospects and business partners and centers of influence. And then we have the ability to do that for them. So we can go in and actually be a delegate. So myself and a few other folks in our back office team, we're assigned to certain reps, and then we do that on their behalf. So we send out the content to them prior to. They opt in to any campaigns that we're going to do so that they're always aware of what's going out and they stand behind, the content because they're going to be the ones who get the calls and the questions, right? So once they opt in, then, our team will actually do that on their behalf for them. And then we're able to go back into the system and look at metrics and we can, pull different things to let them know. So majority of the time we're using similar content across the board, but some of our wealth consultants, our top producers, we also do customized content strategy for them as well.
Nice, thanks.
Okay, back to the customer journey then. So they now know that you're offering investments. How do you engage with them digitally? Adam, how would one go about using Asset Map to engage with these clients?
That's a good question. And hello, everybody. I think, what we're seeing a lot of today is general confusion about how to really enable digital engagement when we are so classically face-to-face and human. Even though many of us are obviously using Zoom, we were joking earlier about how the vernacular commonly is about, you're on mute and no one can hear you, right? We're all saying that at least 3 or 4 times a day. But in terms of actually the collection of data and also the attempt to lead with advice today, right? We all want to lead with some form of advice that kind of translates into financial planning. One of the challenges we've been trying to address is how do you get somebody in the front of that funnel past, okay, I'm interested in talking to your organization, but I need something out of it quickly. I think we're really seeing a lot of consumers that they know they need to do retirement planning. They know they may need maybe insurance or some annuity, or they need better banking. They just can't get to it. So Asset Map has really been focusing on the collection of data with a reward. And the reward for us is to create a visual diagram of their entire life on one page, as some of you know. And then use that as an engagement opportunity to not only say, hey, God, we notice things are out of place. You might think about this and apply our advisor intelligence, or at least our community of advisors, let's say within an institution. And that has what's happened as a result of that over the past several years is advisors are uncovering more opportunity to serve clients and then engage them into the rest of the services and funnels, whether that's investment management, core financial planning like eMoney, or some of the other trust services or banking service that we're seeing. So I think the bigger challenge that many of the participants on this call are probably dealing with is how do you get them, once you do the marketing side, how do you engage them so that they've started an active conversation in a digital framework where you can then actually push them to the teams that you have that need to serve them.
Kelly Brennan, what kind of experience has eMoney Advisor have with client engagement?
Yeah, I think this is, to Adam's point, it's such a huge focus for us, especially if you look at, the past year and what's happened. It's been important now more than ever to have a digital way online to engage with the client, not only as, bringing them in and converting them, but then also giving them a sense of emotional reassurance, right? So that question of, how do we do that? How do we convert them and get them there? I think there's two different things we're doing. Number one, eMoney has really invested in our newest client app called Incentive, and it is a way essentially to get a client that first financial plan. So you're doing the marketing, you're getting that prospect engaged, they're entering basic info, age and income, and then what you're doing is you're putting them into budgeting and spending challenges weekly to get them to change their behavior. And by really exciting them and changing their behavior, they're saving more towards that retirement goal. And so that gets them started. And then the ultimate conversion is, okay, now that they're saving more towards retirement, they're seeing how on or off track they are, then it's engaging with an advisor and letting an advisor really take them to the next step of financial planning and beyond that first client-led financial plan. So I think for us, it's really about creating those tools that drive and change that client or prospect's behavior so that they can ultimately see their progress and know that, okay, I've done it on my own, I see where I'm at, but now ultimately I see that validation that I might need a person to come in and support me.
But how deep can one go digitally, say, into planning? Can you actually do a financial plan digitally? I guess, Kelly Zanstra, you've had a lot of experience with that.
We have, and I would agree with my partner, Kelly. And, the digital experience really is something that we have developed to engage somebody really empathetically and help them really discover their goals on their own and set them up to think through and lead them to advice over time. And the financial planning tool that we have in place that I'll share a little bit more in depth in a little bit is one where we can have a client, we can have a prospect go in, engage on their own, and go really deep into planning if that's what they want to do. It's a full financial planning engine that they can actually complete and do on their own if they choose to, or they can reach into our advisor teams and get access to advice through advisor teams. So yes, the tool can do full financial planning if that's what the client or the prospect wants to do, or it can be used as an engagement tool to just help folks start engaging in that conversation and understanding, self-discovery on their goals and what they're trying to achieve, and an experience they can dip in and dip out of over time as their situation evolves and changes.
So what's the tripping point at which someone could move to an advisor? Is it as simple as saying, would you want to talk to an advisor, or are there more ingrained?
Absolutely.
Mm-hmm.
Absolutely. In our experience, as you're going through the experience, there's always a reference and an opportunity to schedule a meeting with a team of advisors, reach in and make a phone call to an advisor. So advisors are always available throughout the course of our experience based upon what the prospect or the client is looking to get in terms of advice from advisor. You can reach in and ask a question or engage in full financial advice.
And Jess, I think you have some similar experience at Webster with doing full financial planning digitally.
We do, yeah. So we leverage eMoney. Wealth Vision is LPL's version of eMoney, and we do where we can actually have someone fill out, a fact find, and then we will have someone in our back office actually curate that information and then pull out a select plan for that prospect or client. And we work with our advisors. So not only, can we do it for a prospect, but we also can work hand in hand with our advisors to assist them with it as well.
Although it seems to me it's difficult to hold someone's attention in a financial plan digitally. I mean, again, the marketing geniuses who tell us how all this works say that in a digital environment, you really need to have thumb stopping, ways in which to keep people from scrolling on to something else, right? And so, how do you achieve that in a digital environment where someone is being distracted and there are probably pop-ups happening on their screen suggesting they do other things as opposed to going on to the next aspect of the plan?
So Ken, I'm gonna throw something else in there. It's interesting. It's an interesting question. I'd be curious what everybody thinks, because digital engagement of advice, it still has a component, as Kelly mentioned, about empathy and understanding the user and guiding them through that so that they don't get lost along the way and drop off and get distracted by their emails. And so when we tend to think about digital engagement, we do think it's very much professionally curated. There is a tour guide, there is a financial advisor. We have been seeing recently that the patience for full-fledged financial planning is actually waning. That ADD generation where, give it to me now, I need to understand, is really, I think, starting to come to bear, especially given the demographic of who's buying financial products today or who will buy them. And so one of the things I know Asset Map has been focusing on is how do I do engagement in 10 minutes? And how do I do needs analysis in 30 seconds so that I can decide who really needs to go financial planning and who needs triage? And I think not having both of those outlets is a mistake, because there's still, as much as we know people need to do financial planning, we don't, for some reason, we still can't get a majority of our clients and advisors to execute it. As a recovering financial planner myself, I know this personally. I know that Kelly can relate, kind of getting people to do what they know. So I would be really curious what the rest of the panel thinks about whether they think we're actually going to move towards kind of true help, self-help, do it yourself, or whether we're still going to need advisors in this process to curate the process in digital advice. I know someone knows.
Yeah, I'd be happy to add a comment there. I mean, I think that's part of what we are trying to figure out, especially in a financial institution program, is where that utility of having a digital engagement for a portion of the plan meets with now it's time to bring in an advisor, and where that handoff is appropriate. And I think one of the things that is advantageous for a financial institution program as opposed to an independent advisor is the fact that we have access to an enterprise data warehouse or a large amount of transactional and cash behavior information about our prospects. And so we can leverage some of that to maybe look to say this person will be a good fit, or can we pre-fill some of this information in an authenticated environment? And I think those are some of the things that we're really trying to dig into to see how initiatives like personalization can really come into play and benefit, both the investment side of the house as well as the other side of the house. But then to a certain point, if the 6 or 7 clicks is about the extent of your engagement, then what? Then how do we give you a nice warm handoff to a financial advisor or to content that is fresh? We leverage the websites for our advisors through Raymond James, and they have the ability to upload a lot of different content there. And so maybe that's the handoff. We've created some customized videos to showcase a little bit about our advisors, their personality, how they work with clients, what the client experience is like. Well, they were filmed pre-COVID, so no acrylic panels and masks, but what the experience was like with a client. So you can watch that and say, I want that. I want to sit across the table from that person and have that conversation, and here they are, pushing their granddaughter on a swing and we're talking and those types of things. So I think that's part of it, is to try to figure out how you get that piece of it to marry together. But I do think it has to be called out that the access that we have to this information about people, about their behavior, about what they're doing, if they're sending funds to Robinhood every month, then you probably should engage with them, because there's opportunity there.
people seem to be talking about is what the marketing people are starting to call humaning, developing a more human connection with the concept or product you're talking to them about. I've been suspicious of that, of that framework. It really started with people wanting to have a personal relationship with Oreo cookies, and that where you were so involved with the product Oreo cookies that it became part of your persona. Now I can kind of see that with, you know, BMW drivers. You can see that they might have ingrained in them. I'm a BMW driver, but you know, an Oreo cookie eater is, but it is the same concept. How you can make this more human, more personal to the people you're trying to reach. Well, let's continue down the path to see whether you really can provide investment advice without being, again, what the marketing geniuses are calling phygital. That's phygital spelled like fishing, P-H-Y-G-I-T-A-L, phygital, the combination of physical presence and digital. Tim, why don't you, we've done a little survey on what's actually been happening with the growth of robo-advice in banks. And why don't you share that with us at this point?
Sure thing, Ken. Hopefully my screen is coming up for everybody. Yeah, this was a flash survey we conducted a couple of weeks ago. We received 29 responses, sort of divided among 11 large banks that own their broker-dealer and 18 institutions that work with the third-party broker-dealers. Among that group, only 24%, or 7 firms, reported having a digital advice platform. And for the most part, these platforms are extremely young. All but one launched its platform within the past 2 years. And the one outlier launched its platform in 2017. You know, the headline that's at the top of this slide is I'm actually getting a second round of use out of it. I wrote this headline, I think 2 or 3 years ago, to go with an article that we were publishing. And as it turns out, you know, looking in on this issue again, I think it remains true, right? Digital advice, the use of digital advice among financial institutions, remains in its infancy. Among those 7 firms that do have a digital advice solution, 5 of them fall into the digital plus advisor on demand category, and 2 fall into the digital only category. We also asked these firms to tell us a little bit about the size of the business as it exists today on that digital platform. And it probably isn't going to surprise anybody that you know, from a business perspective, this remains pretty small. The average account balance among those 7 digital platforms is, you know, just south of $23,000. The average annual revenue per account on those platforms is just over $100. I also put this little table together to give you a sense of sort of how big the digital platform is relative to the total business of the firm. You know, you can see that, you know, for these 7, the accounts on the platform account for, you know, 3.5% or 3.6% of all of the accounts in the firm, 3.5% of client households. less than 1% of AUM, AUA, excuse me, and even less, 0.58% of revenue relative to the total investment services revenue of the firm. So yes, I would say that digital advice sort of remains an infant compared to some other pieces of our businesses.
Mm-hmm. Well, let's look at some examples of robo programs that we have available to us. Devin, you've actually been at this for a while. Could you tell us how you go about it?
Yeah, for us here at First Interstate, we're probably about a year and a half in to our digital channel. And really, it kind of fits in because at First Interstate, we have 3 different delivery channels we really work at with our advisors. Because we have a trust component of our business and our retail brokerage business, which we use LPL Financial, similar to Jessica with Webster Bank. And with LPL, we have one of our digital tools. Their advisory platform, Guided Wealth Portfolios, is one of our digital offerings, advisory platform. But the way we look at our channels is kind of 3 different levels. And a lot of it's based on kind of the client needs, the complexity, and the overall relationship. And also the size has a little bit to do with that as well. But our top tier would be like our wealth advisors. And those are going to be pretty much our highest level individuals, our top tier offering where they operate on both platforms, the brokerage and the trust. Very holistic, comprehensive financial planning, have a team of trust specialists, assistants, and then we have an in-house portfolio management team that actually manages those assets on our trust platform. And then we have the next level, and I guess if you were to put a dollar amount on it, probably about $500,000 and greater is generally that bottom line for them. But generally the most complex, estates, trusts, individuals, entities, nonprofits, whatever the case may be, that's really where they kind of fit in their area. From there, we have our financial consultants that are kind of that next tier, and they're only on that brokerage platform. That's the only way they operate with LPL. And again, more complex cases, things like that. They have a lot of skills, a lot of designations, but barely, highly skilled individuals. And again, they're working in the office. Maybe not today's world. They're probably doing a little bit more virtual than they're used to. But generally, they're going to be that more traditional type feel where you're going into the office, doing that holistic financial planning approach as well, full service, whether it's insurance, asset management, financial planning, whatever the case may be. And so where our digital team kind of fit in was one, we are a community bank here at First Interstate. We operate in 6 states in the Pacific Northwest, and we're very proud to be a community bank. And we understand a lot of different entities have exited maybe that smaller segment of the market because it just doesn't make sense. A lot of clients could be very cumbersome. What is the rule? Majority of those clients on the lower end make up very little of the revenue, but probably take on majority of your time and things like that. So by creating our digital channel as a way to provide an avenue for those clients to still be able to get service, and because that's something that's very important to our institution, is to be able to serve everybody from a community bank standpoint. So whether they're just getting started, but we also have to streamline that and be more scalable and efficient by moving some of those clients from those advisors in the field, because they may have such large books that it's just not, they're not able to really dive deep, get that full wallet, really do that comprehensive planning with all of our clients. And so by removing that lower portion of their book, putting them in a more streamlined type approach can help create more capacity for them to truly dive deep and do that holistic planning, uncover other assets, and truly drive more revenue, but still providing a solution for those clients in a more streamlined and scalable approach through our digital channel. So we kind of focus more, generally speaking, on that more lower end of the book, where we probably don't have as much complexity, just getting their foot in the door where we can really get things started for them. But we also look at a team approach where they're trying to send stuff to us because, of course, they don't want to maybe have to deal with all these clients, and some of them, unfortunately, you probably haven't talked to in a handful of years, or maybe there's not as much relationship. And by transitioning them there to us, it kind of maybe reopens that relationship, gives us a chance to say, hey, I forgot all about that. Oh, by the way, I also have my old retirement plan. Can we visit about that? So it helps us to kind of reinvigorate that relationship, I would say. But also, we want to be able to transition them back to the field and kind of look at it as moving up the ladder. So as we build this, we build that strong foundation, we really get them going, and we start uncovering that complexity increases. All those things start happening. That's when we want to be able to hand them off back to that field and keep that nice relationship to be able to refer them back to the field and make it more of a partnership and not a competing between the two. So we're very focused on that team approach. And I'd also say we've been very proactive as we've gone about it. We don't consider ourselves as just a service center. We've been kind of doing market by market, working with those advisors to make sure, one, it makes sense to bring them on, but also being part of an institution as well. We want to make sure we're not upsetting the bank relationship as well if they're big commercial clients or whatever the case is. So we're trying to be very strategic by who we're transitioning into our delivery channel, and going through the process, and then reaching out to every client individually to just have that conversation, introduce ourselves, and start establishing that relationship. That first time, is more of an intro. We don't want to dive in too deep necessarily, because they might say, hey, I don't know who you are. I don't feel super comfortable. You're calling me from Montana, I'm in Wyoming or Washington or whatever the case is. So trying to be strategic about it. And then as we develop that trust and earn that with them, that's when we're going to start looking at more comprehensive, getting more into those planning conversations, and truly trying to take care of that holistic picture. So that's really kind of how we fit in. We're about a year and a half into our program. We've had a lot of great feedback throughout our advisors and our bank partners. We really have not had much pushback. I'd say it's probably been less than 1% of clients have been truly offended that, oh my goodness, I'm going to this digital, what does this mean? We know it doesn't work for everybody. There's some that are going to transfer out, and that's just the nature of the business. But we want to make sure we have the ability to provide a solution to everybody being a community bank. And then out west, where we may not have as many advisors yet, because we just went to Washington, Oregon, and Idaho in 2016, so we're still building out that market with advisors. This provides a solution where we can meet everybody, at least in some capacity, as we get that built out. So that's kind of who we are right now. I'll pause there because I don't want to get too much on a tangent, but open to questions for sure.
So I was just going to jump in there. I think, Devin, you've done clearly a phenomenal job at what I think a lot of people have challenges on, which is clearly segmentation and figuring out, your client base and how to serve them with the right technology. And Tim, I just thought I'd jump in and give a little perspective of how I've seen some of our clients at eMoney do this in this space. And I think it's, there's different solutions out there that are, right fit to tackle that. I think we have a few of our bank broker dealers where they've deployed a digital advice tool with, those clients to really manage prospects coming in and smaller accounts, where they go through a digital account opening solution tied to eMoney and Fidelity, where they can actually have their digital account solution and their own client experience right within the eMoney client portal. And then that goes to a call center that ultimately manages the client experience. And then other clients that maybe are more of a fit, Devin, to your point, to more of that holistic planning or in need of maybe that first financial plan, they can move into an advisor, managed relationship within the advisor side of the platform. So, there's different ways to do it based on the technology you utilize, but I think that's just another example of how some of our bank broker dealer clients have accomplished it. And I think that you guys have clearly done a great job, Devin.
Awesome. Thank you. Yeah, it's been a process, and I know the segmentation has been something we've been working with for quite a while. I know we're also using some of the same tools Jessica mentioned with the automatic campaign tool and some of those things to help streamline those touch points as well. Because again, when we're going to have a lot larger account load, to be able to truly make sure we're having that personal touch by developing those campaigns and things where we can get those touch points in an automated fashion. And then that way it can also drive some additional business by maybe talking about topics in particular. It has also opportunities for sales, whether it's with us. Sometimes insurance can be a little bit more tricky on annuities and some of those more large contracts and things, or maybe it's more we're teeing it up for those advisors in the field and things of that nature. But I know the segmentation was a big piece and definitely took some time, but now we're rolling and it's been very good so far.
Well, at the other end of the spectrum, I think, Holly, you've had a digital advice offering just for a few months. Started, in August?
Yeah, this summer we rolled out the Raymond James version of digital advice, which I'm not as familiar, Devin, but Mike, is the LPL solution, the guided wealth portfolio, is that a hybrid, that there is an advisor assigned to the account? Jessica's nodding yes. Okay.
Yep.
Yeah, it's very similar on the Raymond James side as well as to what we rolled out, which it's not a true digital advice solution. It's more digital engagement, right? So and we did something very similar to what you did at First Interstate, which was to associate that with a service team, what we call our Addison Direct team. We had our relationship managers, who are licensed financial advisors, take on that book of business. And then we complemented it with the digital advice as a way for them to open new accounts. And I would say that it did not take off in the way that we had hoped. I think this is one of those we're learning. You know, the Addison Direct program as a whole has been very successful for us in servicing some of our smaller accounts. But in terms of bringing new clients on through the digital advice, we just haven't seen as much traction as we thought we would. The minimums are $5,000, I think. So there's still a space. I think you talked about being, you know, community financial institution, and I think there's still a space, especially with credit unions, that goes below that for engaging fully digitally without an advisor relationship. And that's probably a whole nother call to talk a little bit about that. But I think from our perspective, some of the things that we saw were a little bit clunky in terms of our advisors kind of understanding, well, should I be using this tool? Is this just something this other team should be using? And so we talked to them a little bit about it to say, you know, this really isn't where you want to be spending your time on this tool. You know, we're going to put this in the hands of these other individuals, but if you think that it would complement your practice, we can absolutely turn this on as a part of what you do. But, and I don't want to speak out of turn necessarily for Raymond James, but we've worked very closely with their team that put this together, and we were early adopters. We've kind of been in and out of these conversations for the last couple of years with them. And what they really discovered was that some components of the digital advice tool that they had built functioned for advisors in other ways. So basically advisors said, well, I really like the way you're onboarding people. Can I break it and just take that piece and onboard my clients with that? And so that's really what we've started to see, is that our advisors like some of the other aspects of it, like the file sharing opportunity that exists, that was built originally within the digital advice portal, but now is available to all of our advisors to engage with prospects in an authenticated platform. So we've seen some success in some other ways, and the adoption in the last couple of months of that tool has really started to take off with some of our top producers. So we're seeing some aspects of the digital engagement kind of emerging out of that digital advice tool, but we certainly aren't at a level of, you know, opening multiple accounts every week with folks on this, you know, Freedom Foundation's platform, you know, engaging digitally just with our support team on that. So I would love to hear more about some of the other programs. And I thought what Kelly said about e-money, you know, and some of the things that you're doing, it sounds really interesting, because I think that there is definitely a difference between this hybrid engagement and then a fully digital experience that does not involve that advisor connection.
Mm-hmm. What's your experience, Jess?
Yeah, so I think, you know, Holly, we had a similar experience when we launched. We launched, you know, Guided Wealth Portfolios back in 2017. And I think it was a slow start. You know, we first went at it with our two call center financial associates that we have, and we really marketed to the Webster Bank non-Webster Investments book. You know, so really from just a prospect perspective, you know, non-investment, but thinking that the $5,000, you know, initial investment, and it was slow. It was very slow, I think, to catch on. Where we've seen our success over the last few years is, you know, similar, I think, to Devin, where we've worked with specific advisors, where we've gotten them onto the Guided Wealth Portfolios platform. We've taken a look at their specific books of business and segmented it and opened it up for them to be able to work with sometimes those lower level clients. In addition to that, you know, we are right now undergoing pretty robust segmentation and looking at our overall book of business and looking at how do we, you know, manage all the way from digital all the way up to, you know, high net worth 3 million plus clients. So, you know, we're still learning, I think 3 years in, but I think just the outbound marketing didn't seem to have as much traction, where we've really been able to see it as a part of the advisor's practice, whether that's complementing what they're already doing or segmenting, you know, one-on-one, looking at their book of business with them.
So Kelly's answer it. Do I understand correctly then that your Ameriprise platform at your center is focused on planning, or say foundation planning, as opposed to digital advice, as opposed to what it's come to be called a robo?
Right. Well, our solution, it starts with that engagement, and it leads both clients or prospects into that foundational advice. And so as we talk about, and I'm hearing the different panelists even describe, people are in different places in their lives, right? And the amount of time they want to spend and how deep they want to go at any point in time. Our experience, what we've tried to develop is an experience where you can do foundational planning on your own. You can establish one goal, multiple goals. You can utilize it to go deep into planning. It can be versatile in that way in terms of using that experience and coming back to it and continuing to evolve in it and going deeper and then reaching out to get the advice. Our tool is foundational planning, and in order to make a transaction or actually get advice, we do have the advisors that clients and prospects would reach into to get the actual advice. But the advisors and the client have access to that same digital experience. It's actually the same tool that we use to deliver financial planning. So it's this experience where it's evergreen, and it's something that the advisor and the client can collaborate on together over time and continue to update, establish new goals, create deeper planning relationships into life insurance and further down into that advice. So the platform is more about that foundational planning, going deep, plus the deep, we do full Monte Carlo simulations in the planning tool, and then really articulate for our clients sort of what gaps there are that they have in achieving those goals. And those gaps are kind of served up so that then they can connect to advisors to try to solve for those gaps.
Well, it seems like all the approaches that the people on the screen have taken are digital. They're all designed, or as some of you call it, hybrid, a way of using digital tools to either engage with a client or collect information. But the ultimate objective is to either get someone to work with an advisor, or if they're maybe not wealthy enough or don't have enough financial activity, maybe to serve them in a more cost-efficient way. We wanted to have an example of a true direct-to-consumer, no physical presence example to share with people, and we found one at BBVA. Unfortunately, last week it was announced that they were being acquired by PNC. So they're kind of like a one-legged person at an ass-kicking contest right now. They're pretty busy. So, but they did share a deck with me that I think I can share some of their things with you. There we go. In their case, they've gotten someone to go to a screen, and they have a choice of choosing a self-directed brokerage account, or to open what is essentially their version of a robo-advice. So let's say they chose that. They chose a robo-advice. Their digital portfolio has a $10,000 minimum, costs 75 beeps. It really is based upon the Lockwood chassis, and it's supported by a desktop or a mobile app. Going back to Holly's comment about the most people can do are 7 clicks. They essentially have a 7-click methodology to help you decide which portfolio you're going to use. They ask, what's your goal? And then they try to get information about how much money you're trying to save and how much money you want to end up with. They want to know when you're going to start drawing money from the account. And then when you have withdrawals, how long it's going to last. So this accommodates the kind of retirement savings approach. How long will it take you to retire, and how long you want your money to last? And then there's a couple of questions about risk tolerance and attitude toward inflation, and they give you some portfolios to look at where you can kind of reveal what your risk tolerance is, and another risk tolerance question. And then they recommend a portfolio that you can pick. So very short approach, and that leads you then to an account opening. Now they use the same account onboarding process for their self-directed account. So both streams, if you will, end up at the same point. And if instead you decide you want a self-directed brokerage account, where they offer discount trading at less than $10, your ability to trade online of equities, ETFs, and mutual funds, you can actually trade options and margin based upon some credit approval, and other options like remote check capture and so on. And all this, of course, both the self-directed brokerage account and the robo account are supported by a mobile app. So that's essentially an example of a pure direct-to-consumer, no intention of trying to divert someone to an advisor, and apparently no tripwires that'll get you there. And anybody else in the broader call are taking an approach like that? I guess not.
Ken, while we wait for maybe somebody to chime in on, if they're taking that approach, and in all these approaches, whether it's direct or advisor assisted, it requires some investment and a plan that the bank has to put in place. And I'm wondering, for those of you on the panel that have had success with this, how have you really garnered that resource investment in a business that we see is growing in popularity in the population, but makes up such a small revenue, asset, and profit share of a business that it's hard to show that today it's worthwhile? How have you all, though, that have really gotten investments in the business, how have you done that successfully?
I can add a comment here, and I know that I'm always talking about data, but that's an easy way to showcase this if you're going to your partners and the other avenues of the financial institution, is to look and see what consumer behavior is. Where are assets outflowing, and where are they going, and how do you compete in that space? And when you pull up a lot of the competitors, if you pull up Betterment, if you pull up Robin, I probably shouldn't list brands, unnamed brands. If you pull up a lot of unnamed brands, you will find that some of the first things they present on their website are lending products, credit cards, debit cards, and lending products. So really, you're starting to see them dip their toe into this other aspect of consumer space. And these are core products and services at your financial institution that they're being cross-sold if they have these relationships. And that was information that we put right out in front of our executive team to see, so they'd know that.
Nice.
Well, as Pat Frost will tell you, credit products are very profitable. I see that Pat has joined us. Tim.
Hey, Ken, I just wanted to answer your question you had after you showed that BBVA. Ours is very similar. As I filled out the survey, we just introduced ours this summer, and it's Fidelity's product. We're National Financial Services. And so that's pretty much what you went through is our product. And, right now, we're just offering it to our employees and just learning as we do a very, very soft rollout of our robo.
And so in terms of your objective in doing that, why did you choose that approach as opposed to a hybrid digital approach?
Well, we may go hybrid later, really, to be totally honest. And once we start offering it to our customers, we're going to follow up with any account that's 50,000 or greater. We're gonna contact them and try to convince them to have us as a direct financial advisor. Now, we are going to introduce next year a pricing differential. Right now, we're the same price, and we'll be a little robo, but we're going to. That's just what we're proposing right now. We got a lot to figure out.
Mm-hmm. Thanks.
You bet. You bet. Thanks for having this today,
sure.
And all the panel.
And Tim, I think we had a question from Tom Baldwin, I believe.
Yeah. So we actually have, I think, sort of two similar questions here from Tom Baldwin and another one from Matt Paulson that kind of gets to the client journey again. So, Tom's saying that, they're working on rolling out a digital offering in 2021, and he'd look to offer advisor assistance if AUM builds to a certain amount, or if the participant reports a certain level of income, net worth, or savings rate. And Matt's question is sort of more broad. How are you progressing a client through the various channels as they graduate to another channel? Now, I want to note that in both of these cases, there's an assumption about graduation, right? That as your assets grow or as your income grows, you will graduate to another channel. We've seen kind of both from the consumer side, right? Some of what we talked about before, that it's not always kind of a linear progression, right? That there are clients who are wealthy and are working with an advisor today, maybe one of your advisors. They still want to have that option of going in and having something that they operate on their own, or that maybe they're looking to sort of test drive what it is that your firm has to offer, right? So just wanted to add that color before the panel jumps in.
Yeah, there do seem to be a segment of the population that uses a robo account or other activity like that to check on their advisor to see whether their advisor is giving them similar information, better information, not providing as much value add, and so on.
Yeah, Ken, and I'll just add, we've really seen a collaboration as we have rolled out these digital tools within the advisor center that I'm with. There's really a deeper level of understanding and collaboration that goes on between the advisor and the client when you introduce some of these digital tools. The conversations that our advisors are having, they're deeper, and our clients are finding that they're really more satisfying and more engaging as you introduce some of the digital capabilities that can really provide the visuals and really take the some of the financial terms out of the conversation and get it more centered around somebody's goals and the interaction of multiple goals. And what digital tools can do is provide those visuals around, if you're investing here, or if you're doing this there, this is what it does to the goal, and this is some choices you can make, and putting them a little bit in that driver's seat too around seeing different scenarios build digitally in front of them, and really helping them understand some of the choices that they can make in order to increase their financial confidence.
I guess, Adam, you're a real believer in the visualization and trying to pull it all into one picture.
Not an easy thing to do. Get rid of that vernacular Kelly's talking about. Well, as we always joke that picture is worth 1,000 words. A picture of your finances got to be worth a hell of a lot more. I think it's interesting. I see the conversation really kind of going towards digital. I don't want to call it digital only, but digitally non-humanish experience, letting the consumer to do their own work. I don't know. Most of the research we've done And most of the experiences we've had personally, not only in the field, has promoted the idea that consumers are their own worst enemy when it comes time to actually doing, taking good care of themselves. And I think there's been a huge misnomer that holistic financial planning is about retirement planning. I mean, that's almost a disservice that we tend to be saying. So, despite the fact that robo-advice has the ability to, open up an account and then create an allocation that's based upon a target expectation, it's still extremely rudimentary. It never talks about tax, never talks about how you protect your family, and by the way, who's the beneficiary. And so so much gets left out in this argument. That's why I just don't see personally how the digital advice model in its current state even comes close. And it's why when you think about, Tim, the numbers you talked about early on, that the adoption of such programs is still extremely low. And I think it's because consumers also know it's like, okay, you're trying to get me to open an account, and it's, I guess, arguably in my best interest. So I think that there is going to be an incredible increase in demand for advice and outlets. I still think that humans are going to play a great role. It's important to get people into the funnel and engage who's serious and who wants to take care of their own work. But I know that even companies like Robinhood and even Mint through Intuit and Personal Capital are still really on the very early stages of what I think advisors have been doing for years. And if I'm in a position of trying to increase deposits and assets under management and life and annuity and banking and debt products, the full Megillah, if you will, of financial planning, then I seriously want to have a speed engagement experience that allows it to nurture advice over time, right? Solve short-term needs. Oh, I got education planning. Let's figure out how to solve that. Now let's expand that to retirement planning. Oh, let's talk about life insurance planning. Now let's talk about debt management and tax. And now let's go to estates and trust. So I think scalability of a solution is really important. That's going to address both the person who's just starting out as well as who I've got a complex estate, and show as an organization you can engage with them at scale. That's going to be the real challenge for most of us on this call.
Yeah, I really agree with that, Adam. I think that's a great perspective. And I think that, the other thing is that, an entire generation that really hadn't been through a financial crisis just went through one, that probably weren't investors in 2008. And now they've experienced that. There were some people that, experienced that on a digital only platform without an advisor. And there are some people that experienced it with an advisor. And I think it put a lot of advisors in a position to really showcase their value in reaching out. And a lot of the communications and the client engagement that Jess talked about were things that all of us were doing for, March, April, May, June. Being there to provide the assurance, to provide the conversations, the Zoom meetings, all of the things that we do to really, I don't even know how to articulate exactly what it is, but it's a level of comfort that people feel when that person that they rely on to watch their assets and their retirement is calling them and saying, it's going to be okay. This is what's happening. The media influx, I mean, you got an email from anyone you ever did business with in your entire life in the month of March. So everybody was emailing you, but being able to filter through that and get the personal relationship and the personal touch. And I think that was where we saw a lot of folks that were possibly engaging with these digital solutions. They continued to engage with those, and they continued to put money in and out of those platforms to play the market, but they were looking for their advisor to tell them that they were going to be okay. So yeah, if we can figure out the right mix of all of those things and provide those service levels, that's the golden ticket.
Yeah, I mean, I would completely agree, Holly, with what you're saying. We felt the same thing. During this pandemic, our advisors we had a lot of folks who were using our digital tools still reach out to our advisors to just get that reassurance. And within the digital experience that we have, you can actually link up your accounts to the digital experience as well. And so we were able to provide them then a picture of here's your goals and here's your assets, and look at your probability of success actually based upon what we've done hasn't changed. So it's going to be okay. So that didn't affect you, and that's why we're working together. So, providing those digital tools and that imagery and helping them through that has really been a valuable I think, part of the experience that we're trying to create.
And I think one thing to add, Kelly and Holly, I couldn't agree more. I think one of the things that is so important when you think about digital tools, it's also, just like you said, it's that transparency to the client, even ahead of these situations. So you look at what happened with COVID in the market. I think the advisors that did really well and allowed really their client to stay on track and had the client stay in the market were those that had done kind of that lifeboat drill ahead of time and had said, look, like we have this all digitally online for you. We know where it's at. It's updating, in our system every single day. We know how you're tracking, and we're going to have this conversation in advance because we don't know exactly what's going to happen. We don't know when it's going to happen, but the most important thing is we know where you're at day to day. And I think that's also just, digital tools in general. I think that's what it does too when you tie it to an advisor. It's, we're taking them through that process, but on the back end, always having that advisor have visibility or that chat or call center.
Circling back to a comment that Adam made earlier about the challenges of getting people to engage in planning, I think that Kelly's answer, you guys have done a phenomenal job of broadening that among your client base. Something like over 85% of your clients have some kind of a plan. If I remember something that that Dave told us.
Yeah, I mean, Ameriprise is very focused on financial planning, and we sort of pride ourselves in our ability to engage holistically around goal-based advice, and that's been key to really the client engagement and client success over the many years. As we've been talking about now, we're just starting to then take those goal-based conversations and really developing them into a digital platform and bringing clients through that digital experience as part of that.
Do we have any other questions from the cyberspace, Tim?
So we received one from Dave Billiter at Arvest a little bit ago that I think is probably worth circling back to.
Dave's changed horses. He's at First Citizens now.
That's right. Sorry. Well, operating on old on old information.
Right.
So as we've been talking, right, there are clearly a few different methods to sort of how to structure the digital offering relative to your advisors, and there may be different goals that we're all trying to that we have in mind as we're building out the digital platform and as we're making these decisions. But clearly, with the level of adoption where it is, we need some help, right? Getting more folks on the platform, more folks in the funnel. And Dave's question is, how do you enlist the bank in helping you to do that?
Yeah, I mean, I think I can maybe speak to that just outside of necessarily on the digital advice. I think as we look at ways, and maybe this is the pivot, right, that we talked about, is that we set out on this journey thinking that we were going to build this little channel that ran alongside our advisor channel. But what we realized is that it has to actually run within our advisor channel because our advisors need these tools to complement and communicate. And I think leveraging some of the other tools that they're doing the same types of things with on the institution side when they're onboarding new clients or members, to be part of that process and part of that conversation. If they're doing, if they do like an engagement campaign throughout a certain number of days of membership, being a part of that, or looking to see what opportunities might exist from a rate environment to make sure that you get your platform out in front, whatever that might look like and how you want them to initially engage with your program. But I think those pieces, you know, like I talked about before about the conversations about the competitive threat, but also just making sure that, you know, your investment services program and your advisors are part of the conversation. And whether it's something like Devin, you know, talked about it, about a service engagement, maybe that's a first step as you put somebody kind of through and determine where they belong in terms of segmentation, so that you're making the best use of everybody's time. And if you're using something like Adam talked about to do a lot of early data gathering, so that when they do get in front of the advisor, the time is actually spent in the conversation and not in fact finding.
Yeah, and I can say for us, you know, it's not easy, to say the least. I know as we were rolling out our platform in general, some of the challenges I know we were running into is one, our organization has had quite a few acquisitions over the last several years of these smaller banks to fill out our footprint, and a lot of these never had a wealth management offering, period. So they all they think of is stocks, bonds, and that's all you do. And so really the education of these groups, whether it's through, you know, some of our training tools, some of you know, periodic webinars, whatever the case is, but things like that to really drive some of that education of our bank partners so they understand, one, what is wealth management, something as basic as that, but also what do we do, how do we add value to these relationships and really help secure that wallet. You know, the more you have with us, whether it's, you know, mortgage, commercial, bank account deposits, and wealth management, the stickier that relationship gets. So really trying to help them understand the value we can add to them and having those constant campaigns. And again, it's something we're always working on, because whether it's a new acquisition or just turnover in general, where then you're having to almost recreate the wheel and educate the new people coming on board. But we also rely on our team in the field as well, the ones that have those advisors that cover the various markets to, you know, constantly be that voice for wealth management and investment services to tell our story and help reinforce it. But out west, like I mentioned earlier, we don't have advisors in every single market. So that's where it's always something we're trying to do with our marketing team, being a part of an institution and trying to use the resources we have available to us to be able to relay that information to our bank partners. So I know it's not easy, and it's definitely an ongoing process. It's never just done, but that's just some kind of from our perspective what we've been dealing with this process.
But Peter, you know, as we know, if you want to engage the bank in supporting investment services, you have to show them that investment services are great for banking, right. and that as we've as the research we've done for BISA shows that right. investment services bring in a lot of deposits to the bank, and could do more if in fact investment services would focus on that and provide incentives or even track how much advisors are bringing in terms of deposits.
Right. And retain a lot of clients and retain a lot of households as well.
That's right. Yeah. So yeah. The investment services might be the least expensive client acquisition and retention tool you can have. Whereas the focus of the BISA research was, you know, how much additional revenue are you bringing in? It may be that, and as we know, one of the big bugaboos we face, firms face in dealing with the top of the house is that you don't make enough money for the bank. In fact, given how important the research shows how important the investment services are to bring in deposits, given that, you would think that they would be excited to have investment services run at no profit, given all the deposits that are coming in, because they're clearly a low. Not only are they a low-cost way of bringing in deposits, but they're a way of bringing in deposits that also makes a little money on the side as well. So,
you know, Ken, if I could chime in here, I saw David's message and I wrote to him privately, but you know, I couldn't help but think of the analogy of, well, one of the challenges we've seen a lot is that the retail banking side either doesn't have aligned incentives or it's awkward for them to push into planning for consumers that are interacting with them on the banking side. It's no different than, you know, a consumer walking into the CVS pharmacy and all of a sudden the CVS guy is, oh, you want to buy this candy bar? And he's like, you know, you look like you need some medicine. Like, it's a challenging thing to go and say, listen, you need advice, guidance. And so I think one of the things that's going to start to transform this experience is actually enabling people to get healthier, financially healthier. And the banks need to be a huge champion of this because they already have the capital. right? They have some of your money. They have the reason to give you advice. And so what I think banks need to start doing is on the engagement side, they need to start delivering some value proposition that gives you health indication. Listen, have you done your financial health scoring? Have you mapped out your assets for your family? Because God forbid they need it. They need to know where everything's buried. And by the way, we can give you some advice and see if your cholesterol is too high or your retirement is too low, as an analogy. So I think that the way to interact and engage with a consumer is to give them that value. I know some people have obviously created do-it-yourself retirement planners, checklists for what you need to do if you're going through this kind of life. And I think you're going to see more and more of that to try to connect with a real consumer has a pain point that's going to motivate them to get into the scale. I don't know that a lot of consumers are like, hey, I need financial planning, right? They're not there yet. So I'm really curious what other people think about that.
Well, Adam, on that, we know KeyBank does something with a score, and I don't know if there's anyone on the phone or on the call today from KeyBank that could speak to that, but they've really focused on a consumer's score that provides a financial health number, if you to put it in that term, and it adds up. Do you have financial plan? Do you have IRAs? All the types of things that you would want to have if you were working with an advisor or really on top of your finances. And then they publish that score to that client, and then the goal for that client is to increase that score. So I think that speaks to it a little bit. But the important part of it is that the big component to increase that score is, what do y'all think? I mean, it's all investment oriented. It's all what we do. I mean, you can only weight, how well you're paying off your auto loans so high in the overall financial picture. I mean, you want to pay it off, but is that number one on the list? And so a lot of these bank products that, traditionally the bank has said is so important to a client's financial health, they are, but are they really going to get the client to that end goal as much as, periodic investing and having your rollover taken care of, all the things that we do? And I think that's helped, firms that have gone that direction understand a little bit better the true importance that we provide to that client is when you really try and add up what's going to get them to that higher health number, it's us.
Yeah.
Looks like we're well said, Peter. Looks like we're winding down to the end of our time. Any other questions, comments from the audience?
No, looks like we've answered all of the questions that are coming.
Well, that's I guess it's time then to again thank the sponsors, E-Money Advisor, Ameriprise Financial Institutions Group, and Asset Map. Thanks again for your support. We appreciate not only your financial support, but your intellectual leadership in this as well. Looking ahead, well, first of all, we also want to thank everyone in the audience who sat through this and with your attention and input. We hope you'll join us again in future webinars. The next one we have scheduled is December 15th, where we look at the other aspect of omni-channel delivery, call centers. And not only are we looking at the issues in managing our call center in today's environment, but also how the landscape is shifting and blurring between the difference in a call center investment environment and advisors who are working remotely over the phone, facing some of the same challenges as call center advisors in terms of being able to deal with digital tools, virtual and video tools, working with clients, and of course, the ability to develop a remote persona to work with clients. Anyway, that's December 15th. Look for an invitation. And then going beyond, we're looking at planning a virtual seminars maybe once a month in January, February, March. We're hoping to move to a hybrid model sometime in the spring, early summer, where we in fact have some people attending in person and some people continuing to attend remotely, depending upon their personal preferences and companies' rules and so on. And hopefully maybe by the fall, we'll be able to have full-scale in-person meetings again. But in the short run, we're still going to remain digital. Thanks, everybody. And thanks for your contributions.
Thank you.
Thanks all.
Everybody.
Hello.
Thank you. Take care.